Welcome to Spidell's California Minute. I'm your host, Catherine Zidane, and this week we're covering the taxability of California's middle-class tax refund. We'll be covering these payments and all of the other state tax legislation that passed this year at Spidell's Federal and California Tax Update. You can register for an in-person seminar or a webinar session at caltax.com. California has begun issuing approximately $9.5 billion in middle-class tax refunds, ranging from $400 to $1,050 for married filing joint taxpayers and $200 to $700 for all other taxpayers, depending on their California AGI and whether they claim any dependent credits. These payments were authorized under AB 192, which was enacted this year. Although these payments are referred to as refunds, the Welfare and Institutions Code specifically states that these payments are not refunds of personal income tax overpayments. AB 192 also excludes these payments from California taxable income. In a surprise to many tax professionals, the Franchise Tax Board recently announced that they will be sending Forms 1099 miscellaneous for payments of $600 or more, which they did not do for the Golden State stimulus payments that were issued in 2020 and 2021 as a form of COVID-19 relief. The FTB did not send Forms 1099 miscellaneous for the Golden State stimulus payments because they believed they qualified for the IRC Section 139 disaster relief exclusion. We believe those Golden State stimulus payments qualified for a federal gross income exclusion under either Section 139 or the general welfare exemption under federal law. Recipients of the Golden State stimulus payments had to be either an earned income tax credit recipient or have California AGI of $75,000 or less. The federal general welfare exemption is not codified but has evolved through case law and IRS guidance throughout the years. To qualify for the general welfare exemption test, the payment is required to be made to an individual and be paid from a government fund, be for the promotion of the general welfare based on individual or family need, and not be made as payments for services. The legislative analysis for AB 192 states that the payments are being made to, quote, low-income and middle-income Californians in order to provide financial relief for economic disruptions resulting from the COVID-19 emergency, such as the financial burdens of inflation and increasing costs for gas, groceries, and other necessities, end quote. Neither the courts nor the IRS have ever specified an AGI limit for purposes of determining whether a taxpayer has established the requisite need. But they have previously ruled that payments made to disaster victims would qualify for the general welfare exclusion without specifying any type of income limit to qualify for that exclusion. However, whether payments made to taxpayers whose AGI is up to $500,000 to assist them in meeting rising costs would qualify for the exclusion based on need is an open question for which we'll need guidance from the IRS. In the interim, tax professionals will have to exercise their best judgment. Stay up to date with what's happening at the state level with a subscription to Spidell's California Tax Letter. This monthly newsletter also includes a quarterly subscription to Spidell's Strategic Tax Advisor, and you can get more details at caltax.com under Publications. That's all for this week. Join us next time for another episode of Spidell's California Minute.